I'm Moumita and today is the 4th of April 2022. In today's episode, I will be talking about the important economic and financial indicators which were released from last week. Let us begin. In China, the PMI numbers for March was released. Both the manufacturing and the services PMI dropped and they are below the 50 mark. A mark below 50 means that the economy is in contractionary territory. It is the lowest reading since February 2020. The rising number of cases, the lockdown in Shanghai in second half of March, it has stopped or reduced production. The sub-index of employment was down and new orders were in negative. There were also cancellation of overseas orders due to the geopolitical tensions. Now, the fall in the PMIs imply that there is a slowdown in economic growth which is expected. This might prompt the central bank to adopt measures like reducing the rates or infusing liquidity. However, China's central bank will remain cautious as the inflation numbers for February had shown some small signs of inflation rising in China. Moving to eurozone, the inflation numbers for March came in last week. These are the preliminary estimates which is not based on the full data set. The headline number now stands at 7.5%. The prices of electricity, gas, and fuel all rose by 40% year on year in the month of March. Are the numbers likely to plateau? The president of European Central Bank, Christine Lagarde, pointed out three risks. One, energy prices are likely to stay high for a longer period of time. Two, food inflation is also likely to rise because of the spillover effect of high fuel prices. 3. Manufacturing bottlenecks is likely to persist in some sectors. These are likely to keep the inflation numbers high in the next few months. The market expects the European Central Bank to respond by increasing the policy rates by 3 to 4 times in this year. The European Central Bank remains the only major central bank to not have increased its policy rates till now, while the other banks like the US Federal Reserve, the Bank of England, the Bank of Canada, they have all started increasing its policy rates. The other worry for the Eurozone right now is its growth prospects. Russia wants to be paid in rubles, else it has threatened to halt its contracts with Europe. Now, one third of Europe's gas comes from Russia, and Germany, particularly, is highly dependent on Russia for gas. The scarcity of gas may put Germany into recession. What about the other economies? In Italy, the Prime Minister Mario Draghi feels that Italy may not face a recession, however, the damages of war may be quite high. Moving to US, the labor market numbers for March came out last week. The unemployment rate came down. The non-farm payrolls data continued to remain high. The employment numbers in professional and business services, financial activities, and retail sectors are now all above the pre-pandemic levels. Moving to consumer confidence in USA, the Conference Board's index showed that the consumer confidence improved in the month of March. This is because of the improvement in the labor market. People are now feeling confident that there are plenty of jobs available. However, people are still concerned about the rising inflation levels. Home buying conditions also remain low as the mortgage rates continue to rise. Moving to inflation, the personal consumption expenditure number for February was out last week. This indicator is the Fed's favored inflation measure. The number stands at 6.4%. The core inflation, which is inflation excluding the volatile component of food and energy, is also continuing to rise. These are all broad-based signs of inflation. Given such high numbers, the market expects the Federal Reserve to continue to increase its policy rates in the next policy meetings. The next meeting is due in May and the next is in June. Let us talk a little bit about the US yield curve. The 2-year by 10-year Treasury yield curve has inverted. It means that the 2-year bond yield right now is higher than the 10-year bond yield. This is a big cause of worry, since an inverted yield curve is a signal of recession. How? If the long term interest rate, which is the 10-year bond yield, falls below the short term interest rate, which is the 2-year bond yield, then it means that the investors expect the interest rates to fall. So, for a bank who is lending money, it will make lesser money by lending for a longer period of time. So, if banks cannot make money, lending slows down and it pulls down the economic activity. Lastly, in India, the petrol and the diesel prices continue to rise. The international crude oil prices had been volatile and rising since the crisis started in Ukraine. In January, it was below $80 per barrel. Now it is above $100 per barrel and it is volatile. It had even touched a high of $139 per barrel. However, the Indian government kept the domestic petrol and diesel prices unchanged till the 22nd of March. Why? This was because of the ongoing state elections. Now, the government has to catch up quickly. It has already increased the rates 11 times since then. Petrol is up by rupees 8 per litre in less than 2 weeks. Industry reports suggest that prices have to be increased by rupees 15 per litre for the fuel companies to break even. That is all for today. Thank you for listening. I am Moumita. Bye bye.